Welcome back, everyone. Next, we have Zoned Properties, Inc., trades on the OTCQB under the symbol ZDPY, and is a specialized real estate development firm for emerging and highly regulated industries, including regulated cannabis. The company is redefining the approach to commercial real estate investment through its integrated growth services. Please welcome its CEO, Bryan Mclaren. Nice to see you, Bryan.
Hey, Anna. Great to be here with you and your audience.
All right, the floor is yours. Call me back when you're ready for questions.
Wonderful. Thank you so much. Good afternoon, everyone. Good morning, I suppose, for some of you, or good evening, depending where you're tuning in from. Very much appreciate being here with you all. Format for today, going to go through an abbreviated deck, set the table, give some context for anyone in the audience that isn't familiar with our story at Zoned Properties, and welcome back for anyone who is. And then Anna and I are going to go into a bit of a fireside chat and field some various prepared discussion areas that I think have the most value for shareholder time viewing in with us. And then we'll also take some audience questions. So Zoned Properties, we are a strategic real estate development firm, as Anna mentioned, and our primary focus is on the regulated cannabis industry. We've been doing this for 10 years, and we have been through the ups and downs of a very interesting marketplace where regulated cannabis, that it's been emerging across the United States and many other countries across the world. We recently had full national legalization in Germany, and other countries like Canada have shown full federal legalization. But in the United States, what makes this industry so interesting is that the federal government is still navigating how they are going to approach legalization of cannabis, regulated cannabis. That includes hemp, marijuana. And in the meantime, state by state, our local communities, our voters have been approving legalized and regulated cannabis programs across this country. So what's occurred is kind of state laboratories where different regulatory structures have created a booming new industry that is the cannabis industry. And we're seeing significant growth, and that growth requires, of course, real estate. And so as we see these state by state evolutions, and eventually, this year might be a really big year for regulated cannabis to see some federal regulatory action that many in the industry, investors, stakeholders, operators have been waiting for. We're going to continue to see that boom go, and everyone's going to watch and see, okay, well, where's the capital going to come from for this industry? Where are those investor dollars that are so needed to expand those businesses that are growing cannabis, that are processing and packaging and creating exciting brands for cannabis, and ultimately where that cannabis is sold to consumers at retail locations. And so that's where Zoned Properties comes in. Our company has been developed over the past decade with very specific niche expertise on how you can find properties that can be approved and authorized and zoned, hence our company name, can be zoned for regulated cannabis to operate so that our clients and our tenants can build their businesses in this industry. So as we move through today's presentation and discussion, of course, please pay attention to our forward-looking statements. We'll be discussing information, facts, figures related to the company that we believe and anticipate to be correct, though certainly in any industry like an emerging large industry like regulated cannabis, things change very quickly. And so information related to the industry and our company may change as well. Again, I'm going to give a kind of an abbreviated overview of what is typically our larger investor deck so that we can spend most of our time going through Q&A and a fireside chat. But at its core, Zoned Properties as a real estate development company, our mission is to package these retail dispensary projects. So we look to acquire that real estate and match that real estate with long-term tenancy for best-in-class cannabis operators. So what does that mean? What is a best-in-class cannabis operator? For us, that means someone who knows this product, knows the consumer, and is building a brand in this industry that can capture market share related to those consumers. And we, of course, as the cannabis-friendly landlord, We want to be the owner of that real estate. We want to be the landlord to those best-in-class operators. We want to grow our portfolio value for our company and for our shareholders. So the company today, we own a portfolio of properties across multiple states. And over the past decade, as we've built our company in this industry, we've really created two separate sides of our company. One of those sides is a real estate services area of our company. That services side of our company is essential because real estate in complex industries like cannabis requires so many different variables to create a successfully packaged product. That is a secured and stabilized piece of real estate with a long-term tenant that is paying that rental payment. And so as we saw many of these projects over the years, we realized that we needed to have the right sort of expertise related to the transaction. So on the commercial brokerage side, we needed to have the right expertise related to get local and state approvals, permitting, zoning authorizations, security authorizations. And so we built a advising and consulting practice that helped third-party clients go through their process. And as we developed those best-in-class services, that helped build the strong foundation for the core side of zoned properties, which is our investment portfolio side of the business, where we look to secure and acquire primarily retail dispensary properties, again, leased to dispensary cannabis operators. And so we've built a portfolio, and really now is the time in our industry and our company's evolution where we're starting to turn the gas on and really fire up the engine on the acquisition and portfolio growth side. We've spent many years building out the services side, building out our expertise. And so now we're turning our attention to raising smart capital and good capital allocation to acquiring new retail dispensary properties and building that portfolio value. And you can see some of the figures related to our portfolio today. 100% leased. We're doing about 2.6 million annual rate of rental revenues, and we have some significant growth year over year related to growing out our investment portfolio. So that strategy of how do you actually package these assets and create a successful value proposition for your investors and for your shareholders? For zoned properties, it all comes down to something in real estate called highest and best use. So when you're investing in real estate assets, there's two primary important aspects of that asset. What is the tangible hard value of that asset over time, and what amount of cash return can that asset produce for you? In real estate, the use of that asset we call highest and best use that can create the most value. And so at Zoned, what we do is we use this system where we are identifying all of these properties in a given marketplace. In cannabis, we call them green zone properties. So that means a property or a parcel of land that can be permitted, qualified, and zoned for a cannabis operator to use for their long-term operations. It is extremely difficult. It's very complex. Every single different locality has a different set of rules and regulations. And so what we've done at our company is we've built a bunch of proprietary property technology, and we've built out a team and a process that allows us to dive into an entire market. So a state market, for example, map and research every single piece of property in that state, find all of those green zone parcels, and then go to secure the best properties through our deal negotiation team. And then we can match those secured properties that are qualified for cannabis use with the best-in-class tenant operators in that space. And so by doing that process in our value-add real estate development approach, we can increase the highest and best use for a property. So for example, we can take a old piece of retail real estate that was maybe a restaurant or a bank or a quick service that has closed. We can identify that as an asset that can become a cannabis asset, increasing its highest and best use. And then we can retain much higher value from tenancy and rental payments off that asset. And oftentimes that's what we call a cap rate or a capitalization rate. What is the annual percent of net operating income or cash return from a given asset based on how much CapEx you put into and invested in that asset. And so our secret sauce at Zone Properties is that we use our team of experts that have best in class going through this process, hundreds and hundreds of these cannabis projects across the country over the past 10 years. We use our proprietary technology to identify those best sites, a lot of which are off market. And then we bring those to market to find a new cannabis tenant for those properties. And we place them under long-term 10, 15-year lease agreements at much higher cap rates than the previous use. So 12, 14, 18% cap rates on these projects. One of the reasons we're able to accomplish this is that we've built some serious marketplace relationships. So one of the benefits of building the services side of our business, which doesn't have as much scale potential, yes, we create active revenue opportunities. Yes, we build out contracts with third-party clients across this country. We have a great commercial brokerage practice, very active in states like Florida and Arizona. But the key is relationships. In any big industry, especially an emerging industry where there's lots of volatility, lots of new companies coming into the market and transitioning into mergers and acquisitions or exiting the market, building relationships with best-in-class and high brand-focused operators, partners, investors is a core pillar for Zone Properties. And we continue to do that as we build out our investment portfolio, identifying new properties and new tenants. A big aspect of our underwriting, when we look at those assets for acquisition, of course, we pay close attention to the quantitative and financial aspects of these assets, but also what are the qualitative aspects of any investment potential, any prospective acquisition. It's who is going to be the operator in that site that's going to be making that rental payment over the next decade or 15 years. We want to make sure they can succeed, and we want to make sure to add value to these projects by introducing them to our own preferred partners, preferred service providers. There's a lot of that goes into real estate projects: title and escrow, insurance, security, architecture, development. So over the past 10 years, we've built relationships with the best ancillary service providers that the cannabis industry needs for real estate development. And our property technology is one of the backbones of this whole process. So over the years, we have invested in various different property technology initiatives and startups, and we have collaborated and created joint ventures and built our own in-house proprietary technology. Two of our flagship projects that we're really proud of, the first and foremost is a platform called Rezone. So this is a project that we created a partnership with one of the leading zoning and permitting companies in this country called Zonomics. And we took their existing proving platform and we redeveloped it into a platform that could approach the cannabis industry, meet those specific needs. So we're using that platform in-house right now as a proprietary competitive advantage. And we're also assessing when the right time might be to launch this product commercially to the 50, 100,000 real estate professionals that exist in our country that may look at cannabis. Those are brokers, title agents, property management and servicing professionals, all need information related to the properties. And when you're pursuing development and management of these projects, you need to have really good project management organization. GreenSpace Pro is one of the leading new platforms. We invested in this platform with a company, its parent company called Anamitech several years ago. And this is a platform that retail, commercial real estate and retail dispensary operators use to manage those projects. When are business licenses coming due? When are renewals? When are permits? What needs to be submitted? Again, cannabis industry has been legalized on a state-by-state basis. So every state has a different set of regulations and requirements, and every local city, township, county has their own requirements. So you have to be very organized in order to mitigate the risk and deliver successful projects. And so when you handle all of these different complexities related to the cannabis industry, you can package a new highest and best use project like I've discussed. And here's what one of these projects looks like. We just closed on this transaction earlier this year in January of 2024. It was a $1.6 million all-in investment for us. And this project, after we worked with our partner, Justice Cannabis Co., that's the retail dispensary brand is Block Dispensaries, Block Cannabis, adding value to create that new opportunity for this site to be used as cannabis in an amazing location. So this site will produce a 16.5% capitalization rate for zoned properties in that average rent we collect over time on a nearly 15-year lease agreement. And so that's the whole focus for zoned properties today, is allocating capital towards hard, tangible real estate assets that can produce great cash flow and revenue for the company. You know, how big is this industry? Well, it's looking like it's going to be pretty big. You know, over the past decade, all the speculation around, will cannabis federally legalize? Will there be enough momentum? And what we've seen is the grassroots advocacy, state by state, community by community. The people want regulated cannabis. And you can see just by this chart over the past 10 years and in the 10 years in the future, you know, we're seeing a overwhelming majority of constituents in the United States and voters that live in markets that now have legalization. As of this year in 2024, we have 38 states with some form of legalization. And to give everyone in the audience some quick data, and then Anna, we'll move to the fireside chat maybe in about 5 minutes here, but I always like to pull current data to set the conversation. So as of today, in March of 2024, best estimates are that there are about 12,000 dispensary doors. So there's about 12,000 pieces of retail real estate operating or will shortly operate after redevelopment dispensaries across this country. That's somewhere between 18 and $20 billion worth of tangible commercial real estate assets. And so where are we going to go over the next decade, you know, up to maybe the next 5-6 years? Very likely by our estimates, we're going to see an additional 8,000 to 10,000 new dispensary doors. And these are going to be obviously separated on a state by state basis, depending which states allow what type of licenses, how many locations. But that's the possibility for another $12 to $14 billion worth of retail commercial real estate investment and development. And at a relatively conservative capitalization rate, you know, we're doing about $1.5 billion in rental revenues across all those properties, depending if they're owner operated or not. And in the expansion, you know, there's an opportunity for another $1 billion in annual rental revenues coming off this. So a big industry in front of us, huge amount of consumer growth across the marketplace, and that consumer growth and demand needs real estate. We have a core executive team and management team here based in our Scottsdale, Arizona offices. Myself, I sit as chairman and CEO, as well as our CFO position currently, and have been really building out a small team that can accomplish putting these deals together without putting too much overhead cost on the company. Barrick Blackwell, our president and COO, he's been with us for several years. He has a deep international experience and history in quick service, retail, and in franchising. So he understands how these retail sites need to be developed, and he did a lot of real estate work related to these sites. So what we've built is this team of mapping, research, deal makers that can put these deals together. And quickly, kind of cap structure where we sit today, we've worked really hard to protect our shareholders and our capital structure, avoiding any type of toxic financing. So we sit right over 12 million shares outstanding today. We had 3 million cash on hand as of the last most recently reported period. Of course, we spent 1.6 of that on that new project we just closed in January, and really focused on positive cash flow from operations, and some strong inside and beneficial ownership. So our investment thesis for the company really comes down to, how can we build this portfolio of retail dispensary real estate assets, go after commercial real estate and retail locations that are not cannabis, do all of our value add development process to adjust that highest and best use for the real estate, and get those properties paired with great new cannabis operators to increase those cap rates and return of value on the investment. And of course, we have our portfolio today. We have several properties that have no debt attached to them. We actually just recently announced this week that we are going to be bringing one of our largest assets, a legacy cultivation asset we bought years ago and has been operating with long-term tenancy. So we're bringing that to market for a sale price of $16 million, and focused on those types of capital identification efforts, as well as debt and lending partners, in order to create capital availability for the company to go buy these assets. And so with that, I think, Anna, we will transition into our fireside chat. And I know we have some discussion points and hopefully some good audience questions at hand as well.
Yeah, we do. Great job, Bryan. Very interesting sector you're in. Talk a little bit more, kind of hash it out. Why is the real estate investment opportunity so compelling for investors, especially now focused on the cannabis industry?
I think one of the biggest core points that investors and shareholders, whether you're a shareholder in a cannabis-related company or a real estate-related company, what you really need to know is, what is the best way to capture this kind of exploding industry, the emerging cannabis industry? And to me, and our investment thesis is based around tangible, solid assets. So the number one bright spot in the cannabis industry, and we've had several years of delays of federal legalization and consolidation within the industry. So there's been a lot of M&A activity between some of the largest plant-touching cannabis operators. But one bright spot that continues to just shine like the North Star in this industry is consumer demand. So every time you see projections and estimates around how big is this market, those estimates grow, and a bunch of data entities and experts in the industry often look at the cannabis industry to likely matching the liquor industry, which is about a $200 billion industry annually. So we're in the early stages of the cannabis industry, and from an investment perspective, how do you get in on that growth? How do you participate, in a once in a generational new industry approach, similar to, a bunch of the technology booms that have happened, like internet and AI. So cannabis is a huge new industry. And we view the real estate as a way to approach that industry and mitigate some of your risk by putting investment dollars into actual tangible assets. And it's one of the biggest challenges on the plant touching side of this business. And of course, there are varying approaches to how to capture the direct cannabis industry, whether it's cultivation or sales or branding and packaging of product creation. But those valuations, what those licenses are worth, what the markets are worth, change rapidly. So again, I think it's a great way to enter the cannabis industry for investors, especially if you've been watching from the sidelines. Look at some of the real estate companies like Zoned Properties, or even if you're looking at private investments into the space, look at going after real estate that can be used for cannabis. But especially if you're going after private direct investments or doing your own acquisitions, make sure you have good expertise on your team so you don't end up with a property that fails to get approvals and you lose that highest and best use.
Thank you for that answer. A few questions from Caroline Douglas. When did you start acquiring properties? They've probably increased in value greatly. She also wants to know, are you using the equity to leverage new purchases, or are you going to banks? Basically, how are your investment properties financed?
Yeah, great question. So history of the company, when Zoned Properties started, we raised the initial capital with a go public on a reverse merger of about $10 million that was deployed into our initial assets in the Arizona marketplace. So we've owned our 4 assets in Arizona for many years. 2 of those assets are cultivation sites. And again, our investment thesis over the years has evolved. 6, 7, 8 years ago, cultivation was the most exciting part of this industry. And of course, those are larger dollar acquisitions. That's why you see most of the cannabis REITs out there focused solely on large cultivation sale leasebacks. But for us, we watched this industry as it evolved, and we saw and the tea leaves saying, okay, this product is going to commoditize. And so the supply chain side of this business is going to become very volatile. The supply chain side of the business is going to have ups and downs, and there's going to be changes and consolidations depending on state markets. So our direct investment thesis shifted over the past few years to these smaller retail assets, typically in the $1 million to $3 million range. But those legacy assets we have related to our question, we owned those outright, no debt attached to those properties. So at a cost basis, and what you're seeing those properties on our balance sheet, those are pre-cannabis valuations. So we acquired those properties, we got them approved for cannabis, we put tenants in place. One of those properties in Tempe, Arizona, we used a banking relationship to put a 50% loan to value debt on that project of $4.5 million. We locked that in at a 7.6% interest rate over a 10-year swap vehicle and structure. And we have our other very large cultivation asset in Chino Valley. That's the site we just announced. We're going to bring that property to sale. We're also exploring what potential debt on that property looks like as well. So from a capital allocation perspective, we've got lots of lender relationships in the industry, many banking relationships that will bank and lend on cannabis assets. And then we also are looking to leverage our existing debt-free assets to pull capital out to use for new acquisitions. And then other part of the question quickly, yes, we look at leverage. So on all new acquisition projects, we may cash close on those projects, but we will always look at refinancing those projects or closing on those new acquisitions with a lender or financier in hand. And those may be, several of the banks we've built relationships with, or family offices, or direct high net worth individuals that we have relationships with that will lend and use these assets as collateral.
And Greg Norman wants you to clarify, when you purchase a property, it's pre-zoned for cannabis. What's your contingency if you purchase a property that's not zoned for cannabis?
Great question. Yep. So we typically will not acquire a property that has not been authorized. So it's the magic is in the deal making process. So our deal makers, as we canvass an entire market that mapping and research and our technology has identified these list of green zone potential properties, we are simultaneously securing and locking up pieces of land and properties. And sometimes we can get 4, 6, 9 months of due diligence period. So we always are putting contingencies into our agreements. We might put them under an option contract. We might put them in escrow with contingencies as the buyer. And those contingencies can include everything from cannabis approvals. So we don't have to and cannot be forced to close on a site that has not gotten cannabis approvals. We may include financing contingencies related to a project. And then during those longer due diligence periods, we are simultaneously negotiating and identifying tenants to go in there under lease agreements. And typically our standard lease agreement will have a contingency that we've purchased the property. So what we're doing is we're putting dozens of these projects into a secured, controlled position. We're doing all that work to advertise that project, get it approved for cannabis, and package it with that best-in-class tenant on the long term.
And Bruce Wells wants to know, how are you finding the tenants in the house? Are you using outside realtors or a licensed real estate agent?
Yeah, as many irons in the fire on the tenancy side as you can. So again, one of the great value add aspects of our business is that we do have our real estate services side of the company. So we have, of course, our own real estate professionals, but we've built a large network and zoned properties. I think we've done a really good job with our own brand and reputation in the real estate space. When brokers in various markets have a cannabis project, a lot of times they will reach out to zoned properties. Hey, I've got this seller of this project, or hey, I have a tenant that needs a site. So we have a lot of inbound business development from cannabis operators, from real estate professionals, but it really depends on the state market. So in many state markets, there are a limited number of licenses. That's one of the things that protects the value related to that real estate. So in Illinois, for example, there are going to likely be a couple hundred licensed retail dispensary operators only in that state. You compare that to an Oklahoma or a California that has thousands and thousands of operators. And so oftentimes when we go into a new state market, we're looking at Maryland right now. We'll be active in Ohio that has a new round coming up. So we are contacting and building relationships with as many of those licensed operators as possible, because they are the candidates for tenancy at our property. So we're doing both of those things simultaneously. And the reality is that real estate is so challenging that there is a huge supply-demand disconnect. So if you were to ask almost any new license winner, or on the retail dispensary side, they've applied for and won a license, or they're in the process of applying for a license, you ask them what the most challenging parts of that process are, they're going to say two things immediately. It's the capital and the real estate. And so we view that real estate as really solving two of their two biggest challenges. We take away their need to have to go raise capital that gets tied up in the real estate. Instead, they can sign up for tenancy and raise capital over time. And then just finding these properties. You know, the technology we built it over years of trial and error and best practice creation. So it's all a matter of chasing those two avenues simultaneously. And when you bring a secured, approved project to market, you know, we have several properties in Illinois that are in that avenue. We've secured them under contracts for option or purchase. We've gotten them approved or in the process of approval for cannabis, highest and best use conversion. And so we have lots of prospective tenants kind of vying for the position of tenancy at that site.
Bryan, we'll close with this question just due to time. How can a prospective shareholder or investor objectively assess the true value of zoned properties compared to its market cap?
Yeah, I think one of the focus points for zone properties and for our team in 2024 is really getting our story out there. We believe there's a big disconnect in the market cap, which is kind of floats between 5 and 6 million, has for a recent period of time. A big disconnect between that market capitalization and even just the value of our properties. So for any existing shareholders or prospective shareholders and investors that look at us, you know, read our filings, look at our financial statements. You can see our assets and what they produce in revenue. You know, we have a portfolio. Again, we're acquiring lots of these sites at pre-cannabis valuations. So they're producing much higher cap rates. And where the value creation comes, and I think especially for shareholders, is when that hidden equity in those real estate assets transitions. And so that happens when you can use a property to leverage for bank debt. Again, a good example, our Tempe property, we acquired it, a pair of properties for a little over $4 million many years ago, and sold one of the properties off, developed the main asset for cannabis, and we just borrowed $4.5 million at a 50% loan to value. So I mean, right there, you know, that's where a bank lender's coming in. They see the value of that asset at $9 million, and they lend us $4.5 million at 50%. So when you're analyzing what the value of the company is, you know, even just as a starting point, go look at our assets, see what revenue we're bringing into the company based on those assets, and then, you know, look at the growth potential of this industry, of the company, and kind of see the new acquisitions we're doing. It's all about that highest and best use value creation.
Well, thank you so much for joining us today, Bryan. Really fascinating industry you're in, especially here in the US, watching it unfold in real time. Thank you so much for joining us.
Yeah, thank you, Anna, and thanks for the audience for tuning in.
Yeah, please come back with some updates.
Absolutely.
Okay, everyone, stay with us. We'll be right back with our next presenter.